Hello, welcome to the Wealthy Trades weekly recap and forecast for June 29th, 2015. Let's get started right away. Let's talk about last week. Last week was a pretty volatile, choppy week. All right, monthly and weekly recap. For the week, the S&P 500 was down about 1%, 0.99%. Our Wealthy Trades, we were long the XLP. That was down about the same, down about 1.02%. And then our long KR stock was down about 1.59%. So a little bit of underperformance, but I did want to show you the overall performance since the new Wealthy Trades launched in March. As far as the stocks go, where you do a pairs trade, UNH, S&W. We did that for a while. Last week we went long KR. This week we'll talk about this. But overall, since the beginning of March, our stocks, whether it's just long or pairs trade, are up 8.23%. That's in comparison to a market that's like down 1%. So nice outperformance. Now, let's get into talking about what we're going to do for next week. All right, so for next week, we are going to be looking at a pairs trade. And the reason why is because the trend is up, but the quality is below 50%. So therefore, we're going to do a pairs trade. The best sector to go long is in the healthcare sector, the XLV. All right, the quality is 58%. So what I'm going to do, we're going to move all these stocks over into our portfolio, and I'm going to figure out which stock for this week is the best stock in the healthcare sector, which is the best sector to go long. All right, so moving this over using my normalized pair down technique, which is looking at making sure that it has a levels to win profit. What this means is when ZTS, for example, closed at 48.62 last week, when it rallies up and hits 49.67, does it typically make money from that level, or does it lose money? Well, the levels to win profit will tell me if it's profitable, and it tells me that trading at that level, historically, is a profitable trade. So that's what I want to see. UNH, great. We'll find one that doesn't make money, so I can give you an example. Here's a good example. Humana, when it sells off, all right, the counter trend level is 190.22, closed at 195.50. Well, historically, when it hits that level, it typically loses money. Okay, I know that because as you can see, look at the levels to win profit. It's negative. All right, so if it's negative, I'm going to eliminate it. So anything that has a negative levels to win profit on one of the sides or both sides, I'm eliminating it. So I'm flipping through this kind of quick. ANTM, same thing. All right, so all of these make money. My next pairing technique is using the levels on levels spread. All right, so we got 40 and 21. That's 19%. Well, that's not as good as 38 and 7. All right, so 38 and 7, we're talking, 31% there. Well, that's better than 30 and 17. All right, and what is the spread telling us? All right, so let's look at UNH quick. So the spread is telling us how often the levels on levels trend side tells me what is the probability of this rallying up, closed at 123.25. The upside is 125.68. What's the probability, historical probability, of it rallying up and closing above this level? That's what we want to know because it's in an uptrend. Well, 38.5% of the time that happens. Well, then down here, the counter trend's 120.82. Well, what's the probability of it selling off and closing below that? We want that number to be low, so that's the reason why I look at the spread. All right, so we got a 31% spread. That's great. Well, here we got a 31% spread too, all right? So how do we pick which one's the best? In fact, let me just bust out my calculator here. So we got 30.8 there, and I think we got a little 30.8 there. So how do we pick which one's better? All right, between CI and UNH. Well, I'm going to go with UNH, and the reason why is because look at this. It hits the trend side level 65.4% of the time, compared to only 61% of the time, which is still very high, but on CI. So I'm going to go with UNH. All right, but both of those are good. It's better than that one. Well, actually, yeah, it's better than that one. It's better than that one. And it's better than that one. So UNH is the long position that we're looking to go long this week at the open. Now keep in mind the futures, it's Monday morning, the futures are down a lot right now. It looks like this Greece situation is getting a little out of control. I think it'll be resolved. We'll see. We do have a couple levels we need to watch out for. So we'll see if we do some technical damage this week, and we'll see how that all plays out. But I'll update that throughout the week. So you'll want to watch the videos, the daily forecast videos in the morning to see kind of if we do some technical damage. But for now, I'm staying on the bullish stance. If you remember for the month, we're long the XLV. been long the XLV the entire month, and just so you know, give me 1 second here. I'll kind of recap this. The XLV opened at 75.37. It's at 75.91, so it is up ever so slightly for the month in comparison to the market that's down, so that's good. All right, so we already know for our weekly trade, we're going to do a pairs trade. We already know that the stock we want to go long is UNH. The stock we want to go short is in, look at this, everything's in an uptrend. So how do we pick the stock to go short? Well, we pick the worst uptrending sector, all right, and that's the XLU. The quality is only 36.7. So what we're going to do is we're going to bring all the stocks within the XLU over into our portfolio. We're going to look at this a little bit differently, okay? This is a little confusing, but when you get everything in an uptrend or in the same direction, then you do a pairs trade, you got to use the best and the worst, all right? So here's what we're going to do. I'm going to now reverse it. I usually look for profitable levels to win profit. Now I'm going to look for only stocks that lose money on both levels to win profit. Because we're looking to go short. We know that UNH is our long position. Now we're looking for a short position to pair that against. So negative, negative, good. So anything that isn't negative on both sides, I'm going to eliminate. So it's essentially, I'm looking at this the opposite way that I looked at the other one. Look at this, all of them lose money. So now I'm going to look for the one with the narrowest spread. So look at this, this is only like a 5% spread. Well, this is an inverted spread, so SCG is better. That's an inverted spread, so 23 and 5. So those are about the same. Now I'm going to look how often do they hit the counter trend side, because remember, we're going to short, so 46.2 compared to 40.4, so ETR is better. ETR is better than that one. And why is ETR better? Because it's inverted. It has 25% probability of closing below this, only a 23% probability of closing above that. Well, we're looking for a short, so we want to see an inversion with that. So again, ETR so far has the narrowest spread. Well, look at this. AEP 30 and 21 is better than 25 and 25. So AEP so far is the best. It looks like AEP is going to be our shorting opportunity. So what we're going to do, all right, we are going to go long UNH at the open and short AEP at the open, hold all week long and close at the end of the week. That is going to be our weekly trade. Now for our day trade, all right, we do have the quality above 50%. All right, we should get a big sell-off at the open. That's okay. We're still going to go long, so let's look for our long position that we're going to do for Monday day trade. Now again, there's not a whole lot of people that day trade, so you know, most people pay attention to the weekly or monthly trades. And again, for the weekly trade, we're going to go long UNH, short AEP. But what are we looking at? Let's try to find our position that we're going to go into for our day trade for Monday, for those that do in fact day trade. So I'm going to flip through this, and I'm going to use my same pair down technique that I always use. Eliminate anything that doesn't make money on both sides, as everybody should know by now. Alright, now I'm going to use, so 34. So we got about 25 there. And 30 there, so JPM is better. JPM is better than that. JPM is better than that. 38 and 3 is better than 32 and 1. ABV is better than that. So 38 and 3. Okay, so we got it. All right, so as you know, for the week, we're going to go long UNH, short AEP at the open. Well, for our day trade for Monday, we're going to go long ABV at the open, hold all day long, close at the end of the day. That is our day trade. Long ABV at the open, close at the end of the day. For our weekly trade, we're going to go long UNH, short AEP at the open, close at the end of the week. And for the month, we are still long in the XLV. Those are the trades, and let me know if you have any questions. Again, looks like the futures are going to sell off pretty aggressively at the open. The market should probably gap down aggressively. You want to watch the resource videos each day this week in case we do any technical damage. So pay attention to that, okay? make sure, all right, in the resource section, make sure you are a subscriber so you can watch the premium videos and the podcast videos. Very, very important to stay in front of what's going on in the markets, okay? Email me if you have any questions. It's only $74 a month. It's a steal, okay? And as I said, remember, $74 a month, our weekly trades, weekly stock trades are up 8.23% since March. The market is down like 1%. It's no brainer. Anyway, email me at info@wealthytrades.com. If you have any questions, let me know. Make it a great week. We'll talk to you tomorrow.